Your trades create data that reveal deep insights into your own trading behavior. This video shows you how to use that data to elevate your trading game. And remember, professionals are already doing that. If you want to be a professional trader, you better start doing it right now. So grab your favorite drink and enjoy this video. If you like this kind of content, consider subscribing to our channel for more such videos in future. And don't forget to like this video, algorithm likes it. Today's focus is on data. How do you trade? How do you generate data? How do you capture that data? And how do you actually use it in your trade? Traders, they start trading, especially beginners. They have no idea how to track their trading data. And they just keep trading, making the same mistakes over and over again. They have no idea how to find out what mistakes they are making. And let's say after finishing a trading worth a week or a month, they cannot go back and see where they went wrong, what things they could improve, what things were right, what things they can double down on. And there are so many misconceptions about this data that is still plaguing a lot of people. Today, I'm making a small effort to help you get a better understanding of how to track your data and how to interpret it to help you improve your trading. All right. So first and foremost, let me talk about the importance of using data. This data lets us look at facts and not our perception of facts. So you need to understand, like actually having recorded data will help you look at your actual trading performance, not what you think your trading performance is. So at the end of the month, let's say you make 5,000 rupees. Okay. And let's say your capital is 1 lakh. Now, this is 5% return. And you might be feeling very good about this. But when you get into the data, what you find out is that most of this return is coming from one oversized trade. One trade. Maybe it was an event which you were able to trade correctly. And, you got big profit on that trade, but rest of your trading was not very good. Make sense? Or it is minus 5% return. You have made loss of 5,000 rupees on your 1 lakh capital. And then you find out that there were 3 trades in particular which were actually mistakes, which were trading mistakes. Or there was one trade which was a big loser and all other trades were in your normal range. And if only you could have avoided this, you could have had a profitable month or week. So obviously we don't know how the trades are going to turn out, but we can have strong rules that will help us make sure that we are staying on track with our trading plan and not getting distracted. All right. So all this is factual data. All right. This big loss is a fact. The rest of the consistent trades is a fact. So not just getting impressed by the final figure or depressed by the final figure, you will be able to actually look at the real facts that will help you in your trading. Then it will help you get some clarity about your trading. Most of the time, trading is an emotionally challenging endeavor. All right, it is emotionally draining. You feel tired after trading even for 2 hours, which most of people won't understand because they haven't gone through it. But the mental stress that it creates or the energy that is required to stay focused is huge. So once a trading week or month is over, you actually want to get away from it. You don't want to look into your losses, especially if it was a losing month. So it becomes very painful to go back and see your losing trades. But let's say you have a way of tracking that data and you have nice pictures presented to you. It becomes very easy to track what went wrong, and it will give you the necessary clarity so that next month when you come to trading, you will be prepared with a plan to tackle the mistakes you made and repeat the positive things that you did. It will help you set precise goals based on data. We will look at an example of that, like what exactly you want to do in your trading, right? The only goal that is commonly targeted and pursued in the world of trading, in books, on social media, on YouTube, everywhere, is win rate. You just want to improve your win rate. You want to win on each and every one of your trade. But nothing can be further from the truth. This is probably the worst metric to track. And I'll explain why. Okay, fine. Don't get caught on the wrong path of improvement. This is precisely what I'm saying. Like, you will have to set goals that actually are going to help you. If you end up trying to improve the wrong part of your trading or the incorrect part of your trading, you will be putting in enough effort to help you burn out in a short period of time, but you won't get any results. And I did this for, say, roughly 12 years. I started trading in 2005, but it was not until 11, 12 years that I started figuring it out. Why? I was working incredibly hard, but I was on the wrong path. I was putting my efforts in the wrong direction. And so many people track data, but they don't know what to differentiate, like how to differentiate between the correct path and the incorrect path. And I'll give you a slight glimpse today so that if you're on the wrong path, you will have an idea that yes, you are wasting your time and you need to start doing something different. Okay. An example will be efficiency versus quality improvement in your trading. So most of the traders are trying to improve the efficiency of their trading, which is not really helpful. Instead, you should be trying to improve your quality. No one talks about quality of trades on the social media. Very few people will do that. And even if they do that, they won't tell you how to improve the quality. I'm going to show you today. Okay, fine. Now, if you are tracking data, tracking data, obviously there will be some problems that are associated with them, which I need to warn you about. First and foremost, you cannot rely blindly on the data that you are tracking. That is very, very important. Just because you have found some data, you have recorded some data, does not make it the most useful thing in the world. It may, if you look at data incorrectly, it will actually hurt your whatever you are learning from the data, and eventually what you will implement in your trading. If it is incorrect, it is going to hurt your trading. Some people get too focused on the data and miss the point of trading, that is to understand and learn trading behavior. Trader behavior. You need to understand how a trader behaves. You need to understand what different types of traders there are, what different phases they interact with the market, what mistakes they make, what retail traders do, what professional traders do. This is a very, very interesting and a vast topic, but it is incredibly insightful. What it means is that if you focus on this, the understanding you will get is going to change your life as a trader. Instead, if you just keep focusing on, say, some trade setup, or you have a setup which has 70% win rate and all, I can guarantee your eventual trading failure. You might be enjoying some success right now, but trust me, it is the wrong path you are walking on. Eventually, you will face the issues, the problems, and you won't be able to handle those. So focus on understanding trader behavior. But if you're too focused on data, then you may not be able to learn trader behavior. The example is algo trading systems, the so-called algo trading system, not the high frequency trading systems. Retail traders are using, in the name of algo trading, something really, really stupid. And what do, you backtest it, you find some data, and you try to maximize your profit by tweaking the parameters. And this circus goes on for a long time. I have been a part of that. So I was that clown at some point in my trading career. I have learned from my painful experience that this is not what we need to focus on, right? Analysis paralysis, again, a classic case of relying too heavily on the data and not really questioning the data that you are tracking, or the kind of information you are taking from that data. Okay, wasting too much time on data analysis and not on improving your market understanding. See, data is going to tell you about yours. Having a certain win rate, having a certain profit factor, or having certain different parameters that we are going to track, It's going to tell you about yourself, how you're interacting with the market. It tells you nothing about what market wants to do or trying to do or how you can gauge that. How actually you will be able to understand markets is by improving your market understanding. And for that, you will need a framework to guide you in different market situations. All right. So these two things are different. Equally important. You need to understand yourself also, and you need to understand the markets also. And the combination is going to give you consistent results. All right. So looking at data is going to tell you about yourself, your trading, and then having a framework to understand markets will tell you about what the markets are trying to do, and combine both, and then you have an explosive combination to skyrocket your trading results. And I'm not exaggerating. All right. It will happen. It happens, and a lot of people have experienced it. And please understand, before we even move further and I waste more of your time, when I say skyrocket, I am not referring to, the screenshots that are being shared on the social media. All right. I'm not referring to uh, doubling your capital, 3xing your capital, or 10xing your capital in a short period of time. I'm not talking about expiry fund trades. I'm not talking about buying an option for 50 paisa and selling it for 50 rupees. No, all that circus I'm not talking about. I'm talking about consistent results, a nice plan to trade, which you execute repeatedly in the market system. Okay. Make sense? So this is what we are going to pursue. This is what we are going to do with today's presentation. And if you stay with me, stay connected, I'm going to work a lot on this data stuff, and eventually you will realize that this is life changing. All right. So let us get into it. What are the important factors, or in other words, data points to watch? This is where the rubber meets the road. All right. Pay close attention. This is going to change your life. First, cumulative P&L graph. Everyone knows about this. Daily P&L, we do track this. Number of trades per day. Now we are slightly changing tone. I don't think there are many people who are consciously tracking how many trades I took every day of the week, every day of the month. Some people are doing it, not everyone. A lot of insight is there. Okay. Average win amount versus average loss amount. Unless and until you're tracking data, you have no idea what that amount is, what that number is. If you are tracking data, maybe via Excel sheet or some software, it's a different story. But if you are not, you have no idea. Total number of trades you took. How many trades you took in the month of June versus in the month of May, April, March. What is the trend? Are they too much? Are they too little? What is the trend? What are you doing with the number of trades in a month? Okay, we will be looking at a month trading, so that's what I'm using. Profit factor. Now we are getting really into the detailed stuff. Let's say you make 3,000 average on your winning trades, and you lose 1,500 on average on your losing trades. If you divide the profit by the loss, you will get a profit factor which is 2. How many people track this? And again, I'm saying that not everyone is completely oblivious to that. Some people are tracking, but most of them are not. So how many people are tracking this information? Win percentage. Now everyone is talking about this. I took 100 trades and only 30 were winning. And now you are sad that you are not trading well. 70% of your trades were losing trades. This number everyone knows. This number everyone advertises. I have a algo system which has a 80% win ratio. Get 90% accurate, 95% accurate trading calls. We are all aware of these scams. All right. Trade expectancy. I can guarantee, like if you pick randomly 100 traders, I can guarantee that 90% of the traders are not actually looking at this number. And if you pick beginners, 100% of beginners are not looking at this number. They don't even know what this is. We have, say, a few people here. Can you tell me whether you really know what trade expectancy is? Type yes if you know it, type N if you don't know it. Be honest, all right? This is not to find out like who knows and who don't know, but just be honest and tell me, okay, there is one no, two no's. Come on, guys, participate. I want, a lot of answers so that I get a idea whether, this is something that people know. So I have lots of no's here. And thank you for being honest. So most of you have no idea. Some people have the idea because some people have been trading with me and they have taken my courses. So they know I talk about it a lot. Trade distribution. What is a trade distribution? What is a distribution? Distribution is a normal bell curve that we talk about. We're going to look at examples, so don't worry. So it tells you like how many of your trades are making average and how many are like really, really profit making trades and how many are really, really loss making trades. All this is a distribution. This is a statistical distribution, right? And there is a correct way and incorrect way of using it. Most of the traders are using it incorrectly. And I'll tell you what is the correct way today. Okay. Let us start with the first topic, cumulative P&L graph. This is my actual P&L graph for the month of June. So I'm sharing with you real data. This is not made up data. These are the trades that I have been sharing with my weekly mastermind participants over the month of June. Right? There are so many of them here, and they will vouch that this is not fabricated data. And I'll also say one disclaimer that this whole P&L, this does not include your brokerage and all. Okay. So keep that fact in mind. All right. So what is the cumulative P&L graph is going to tell us? It is going to help us track our overall trading progress. So trending up, good. Trending bad, trending down, bad. If it is below zero, bad. So let's say we started with a negative trade for the month, and then we have maintained overall profit throughout the month. And our trend is slightly slanting upwards. That is good. That is good. Let us keep it simple. Let us not go into all the details. Like, I reach 8,000 maximum and then this was my minimum profit. This was my loss. No. General trend up, be happy. General trend down, be worried. Start working on it. If you're below zero, then obviously you are a losing trader and you need to work more on your trading. Peaks and troughs should not be too wide. So what I mean by that is obviously when you start your trade, maybe the first was even, let's say here. After that, the max profit that you made and the lowest, like you may have a couple of losses in a row and then you lose some, you have a drawdown. The difference should not be too big. The higher the difference, the worse your trading is, even if you're profitable, because then you cannot maintain any consistency. So let's say if this was like this. So I started, I make some money, then I lose big, and then again I make big money. The difference here is too big compared to what it is right now. So if there is a trader who is having this bigger difference, not good. If a trader has lesser difference, that is great. All right. So just remember that. And obviously it should be positive. Like if you are below zero, obviously there is something, there are a lot of things that you need to learn and improve in your trading. That is your cumulative P&L graph. Let us move on. Daily P&L. Now we are stuck with this. Okay. Every day we want to know what money we made, how much money we made, how much is the brokerage and all. We are tracking that very closely. What we need to look at actually is something like this. And this is not all trading sessions, because there were trading sessions when I did not trade because there was no trade. We have to keep track of outliers. Outliers are very big profit, very big loss, that kind of stuff. So now, if you look at my actual results, you will see that there is one outlier, one big profit. And when it comes to losses, you will see that my losses are kind of consistent in terms of the amount I lose. Either it is lesser amount that I'm losing or it is the max amount is consistent. So there are no like big bars to the downside. This is not happening. So at least what I have is an outlier in the positive territory, but no outlier in the negative territory, which is extremely good. Extremely good. All right. If you have your profits also consistent, that is even better. Let's say you don't have outliers, but you have consistent profits. You're making X amount and you're losing Y amount, and there is consistency, number of losses are less, amount of loss is less. Everything points towards good trading behavior. Then your profits and your losses should be in similar narrow range. So what I mean, this is the range of profits that we should maintain, and this is the range of losses that we should maintain. It should be consistent. An outlier higher or lower, both are not really good for your trading. Okay. Again, it depends on what your trading style is. So usually trend followers, okay, will have lots of small losses, and then they will have one huge winner that takes care of all the losses. But if you're intraday trader and you're short-term trader, maybe you are scalping and all, then your results will look something like this. Even this will not be there. You will have consistent profits, consistent losses, and that tells you that you have a method that you are consistently applying. That speaks volumes about your trading. And if, say, I want to invest money in your trading, I don't want outliers. I don't want one big trade that is going to make you a millionaire. No, because the probabilities are still not in your favor. But if I see hundreds of consistent trades where, okay, I'm losing at sometimes and I'm winning sometimes, but on balance, I am winning because I have a consistent method to protect my losses, to improve and increase the amount of money I make on my profitable trades. Yes, that is a system that I will like to invest money in as an investor. All right. Now, as I said, some methods will focus on maximizing consistency. I want that. If you're an intraday trader, short-term trader, or even if you are like short swing trader taking trades for expiry, weekly expiry, maybe you're using credit spreads, all right, which I love, which is a very, very consistent way of making, decent profits. Those are the methods that are focusing on maximizing consistency. Then there are methods which choose to maximize the profits. They want maximum profits from their trades. So trend following kind of falls in that. All right. So if you're an LO2 trader, you will probably realize this, that you would like to catch the third wave, as they call it. All right. Because it gives you maximum profit potential. So for a long time, you have no trades or small trades which help, which cause some losses, but then you get a big one, and let's say it extends, then it becomes a multi-bagger. So that is a method which focuses on maximizing profit. So we are going to look at both. I'm not a methods today because that is not what this is about, but we will look at merits and demerits of both the methods. Number of trades per day. This is very, very important. Not many traders are tracking this. They will track P&L for the day like a hawk. I made 500 yesterday. I made 1,000 today. I lost 500 today. I lost 2,000 today. They will track all that, but they will not look at the number of trades. Now, if you look at this is incredibly consistent, barring one day where I lost my cool. How do I know that? Because I have a rule. Like if certain things happen, I am going to stop trading. Look at what is happening here. I'm consistently taking just one trade a day. And this day, it was not good because I took multiple trades on that particular day. This does not match with my trading system. Even if I make money on this day, I'm not really happy. Why? Because this behavior is going to cause problem in the long run. If I have this kind of consistent behavior, it is going to be a game changer for me. Just go back to your broking terminal and see how many trades you are taking per day. So if this is something like this, very, very erratic, like someday you are trading too much, someday you are trading too little, it is not good for your trading. Not good for your trading. It has to be consistent. Right? Now, what happens if you're a higher time frame trader? let's say you are a short swing trader, so one trade a week. So obviously you cannot monitor a monthly number of trades. You will have one trade a week, so 4 trades a month. So you will need more data. So you'll have to observe your trading behavior over, say, 6 months. I'm an intraday trader. I take trades every day. So what I'm doing, not every day, I try to take trades every day if my framework permits me. So there are not 22 or odd trades here. I think there are total 15 trades only. So why? Because I'm not trading every day. Intraday trading does not mean everyday trading. If my method gives me the trades, I'll take it. If it does not, I won't take it. Make sense? Okay. Outliers should be watched carefully. So if I am taking like 5, 6, 7 trades in one day and not at all following my system or a method, that is not good. That is a warning sign. So look at this, what is happening. I start the trading. Okay, I'll show you my cumulative profit and loss or daily profit and loss, and you will understand what happened here. I took one trade on day 1, one trade on day 2. This was the election results day. I made good profits. Okay. Now, let us go back to those earlier charts. This chart. See now what is happening. I make a loss. Fine. It's my trading system. I make a huge profit. Although this was my trading system, the volatility was so high that I made more money on this day. And what happens on next day? Thankfully, I end up in profit. But I take 3 times the normal number of trades I'm taking. Why is this happening? This is overconfidence from this big win. Now what I know, okay, I have a buffer. I can go and take more trades. After that, I maintain consistency because this was my warning sign. Now, if you are not tracking data, you don't have any idea when you are moving away from your normal trading behavior. Make sense? All right. Now, let us move. Daily win percentage. What is your win rate? It has to be consistent. Okay. So obviously it's not going to be the same. It will increase, it will decrease. But if you look at my win percentage, it is roughly in between 40 to 50%. Okay. I am profitable with a 40 to 50% win ratio. You also can be. Now, I'll tell you one thing. We want to be consistent over time, that is for sure. And for that, you need to follow consistent framework, consistent method, not a setup. Okay. Now, you cannot analyze this number independently. So if a trader comes to me and shows me 90% win rate, I'm not really impressed by it. If a trader comes to me and shows me that he only has 15% win rate, I have no idea what this means till I look at the next number. Next number is profit factor. What happened? Yeah. So we are here. Next number is profit factor. So there are no charts for that number. So I will explain it in on the slides. So if you have a win ratio, you have to combine it with your profit factor to actually understand whether you are going to make money on the long run or not. Right? So these were the numbers that we are going to track. Now let us look at some more numbers which are not presented usually in terms of charts, but you can look at the total numbers. So total number of trades you have taken in a particular week, month, depending on the frequency of your trading. Average win and loss amount, obviously. Win percentage total, like we are in a range of 40 to 50%. Okay. Profit factor. This is what? Average win amount divided by average loss amount. Trade expectancy. We are going to look at it, what this means. All right. Fine. Let us start. So total number of trades. This will depend on the time frame you're trading from. So for me, 5 minute is not a time frame. Daily is not a time frame. Intraday trader is a time frame. Short swing trading is a time frame. I completely look at time frames completely differently. All right. So I have explained it in detail in my course. Today, unfortunately, is not the session to discuss that. But I will conduct more sessions and I will share that with you. So for an intraday trader, it will definitely be higher. So in a month, say I took 15 trades. A short swing trader trading credit spreads for weekly expiry will probably have 4 to 5 trades. Who is better? You cannot tell. A long swing trader who has invested for say 2-3 months, he might have taken a trade 1 month back and he still might be in one trade. So there are no trades for him in the month of June. That can also happen. Make sense? All right. The point is it should be consistent. So if I'm an intraday trader and I have certain rules for taking trades intraday, I should not break that rule. So I'll give you an example. I'm going to stop trading for the day if I make one profitable trade, two loss-making trades, and as soon as I hit my first break-even trade. So I come to trading, I take a trade, it turns out break-even. All right. So it goes higher, I buy here, comes down. Maybe it goes a little higher and I bring my stop loss to cost and then it hits my stop loss. Okay, I'm out. I'm not going to trade. So what is the max number of trade on that day? One. If I take a profitable trade, one. If I lose first trade, then I have one more opportunity to take a second trade and I take two trades on that day. So if you now track my chart, the maximum number of trades on that on any one day are going to be two. So if I show you this chart, it will have a line here, two. It will not go above that. It will mostly be one or it will be two. Now, am I asking you to follow these rules? No. But I'm just giving you an example. And if say on one particular day I have taken 7 trades, that is not good. That is not consistent behavior. Okay. Average win versus average loss amount. All right. Now, obviously, you need to have your average win much greater than your average loss. Right? It's like a no-brainer. It's common sense. If your average win is greater than your average loss over a long period of time, you will make money. Higher the average profit, better. Lower the average loss, better, right? But this data point needs to be looked in relation to another data point, namely win percentage. So this is nothing but you calculate profit factor using these two numbers. And you have to combine it with win percentage. And that is when you will get a true picture. All right. Fine. Win percentage. Now, this is, as I said, highest tracked data point. All right. Whole world is after this. They are advertising this. They are pursuing this. They are just fascinated by this. They believe that a high win percentage is there. They are going to make consistent profits. That is simply not true. Okay. But in the reality, what I believe is that no matter what you try, okay. So if this is the graph where you're tracking your win percentage 0, 100% rates are winners, and somewhere in between, say 50%. No matter what your graph is, it will slowly, eventually tend towards 50%. So if you trade over a long period of time, it will be close to 50 or consistently above 50, let's say, not by much, all right? It cannot be 80% consistently, very difficult, unless you are doing high frequency trading or, consistently lower, maybe it will be around 40% or it will be 60%, 57%, 43%, all numbers are very good. They are very good. All right. You don't need 80%, 90% win ratio to be consistently profitable. So if it is not win percent, then what is it that will help us improve our trading? So if I don't have to focus too much, I have to be consistent. All right. Please understand. When I say I don't have to focus on it, what it means is I don't have to work hard to make it 90%. Even if it is 50% or 60%, I am okay with that. But I have to be consistently 50 or 60%. I cannot be 10% on one day and the 100% on next day. It does not help. It does not help. Okay, fine. Now, instead of improving the efficiency, that is nothing but the win rate of our trades, which is maximizing the number of winning trades, in the complete trading framework, we focus on the quality of the trades, the amount we make per trade versus the risk we take. In other words, average profit versus average losses. Makes sense? Average profit versus average losses. This is what we are going to focus on. If you improve this number, you are improving the quality. If you are improving number of winning trades, you are improving efficiency in your trading. And there is a whole debate. Some people believe efficiency is more important. I personally believe quality is more important. Why do I believe that? Because when I looked at it logically, and when I looked at my performance, and when I looked at how my trading has improved, every time I focused on quality, it rewarded me. Every time I focused on efficiency, it created stress, and it was not an enjoyable experience. All right, let us move on. Now we come to the big daddy of all numbers, that is profit factor. So in simple words, this is where traders will either make it or break it. Either they will become successful or they will quit trading eventually because of losses. So profit factor is simply the ratio of average losses to average wins to average losses. So if you're on an average making 3,000 rupees on your winning trades and you're losing 100 on your losing trade, your profit factor is 3. But let's say you have 3 winning trades and 10 losing trades. What happened here? You made 9,000 and you lost 10,000. So you are losing 1,000. So just having a huge profit factor, it does not help. You need to combine it with win percentage. When you combine win percentage and profit factor, that is where the real magic happens. So let's look at some calculations. I showed you 3,000 average profit, 1,000 average loss, profit factor is 3. If it is 1,500 profit and 1,000 loss, your profit factor is 1.5. Can you be successful with this profit factor? We need the win percentage required to be successful with a 1.5 profit factor. Can you achieve this? I don't think it is very difficult to make 1,500 when you win and lose 1,000 when you face a losing trade. Now the question is, out of let's say 10 trades, how many trades you need to win and how many trades you need to lose? So let us look at some numbers. If we take 100 trades, let's say X is the number of winning trades. Y is the number of losing trades. So total number of trades is X plus Y is equal to 100. So we make some winning trades, some losing trades, and the total is 100. Now, when you win, you make 1.5 times. When you lose, you just lose 1. So if I want to be a break-even trader, and I'm winning 1.5 times when I win and just losing 1 when I am losing. So making 1,500 when I win and losing 1,000 when I lose. So if I take the difference, it should be 0 if I have to be a break-even trader. Simple. All right. Now, if you solve this equation 1 and 2, a little bit of maths involved here, simultaneous equation, if you want to be precise, you solve for X, what you get, the value of X is 40. You want me to calculate this. So if you add these two equations, you get 2.5X plus Y minus Y gets cancelled out is equal to 100. And if you divide 100 by 2.5, you get 40. What it means is that you need to be profitable 40% of the time. So 4 out of 10 trades, if you're making money on, you will be break even. If you're making money on 5 out of 10 trades, you will be consistently profitable. If you're making 6 winning trades out of 10, and you're making say 1.5 times every time you win and just lose 1 on a losing trade, you will be incredibly successful. That is why you cannot look at just win ratio. You cannot be confident that you're making 90% win trades, you're going to be profitable. No, if you're not making enough on your winning trades, your average profit is not bigger than your average loss, you will not win. Make sense? All right. Let us take another example. Let us take a good example like a 3x profit factor. Now the same equations, X plus Y is equal to 100, we take 100 trades, but now we are making 3 times when we win and just losing 1 when we are in a loss. If you solve this, what you get an answer for X as 25. What it means, if you are winning 25% of the time, which is 1 out of every 4 trades. But you are making 3 times the average risk you are taking. You will be consistently profitable. In this case, break even. But increase this 25 to 40% and you will be consistently profitable. Make it 50%, which is coin toss. You will be incredibly rich. Over the long term, you will become incredibly rich. And that long term is not like 50 years. No. Reasonable amount of time. 1 year, 2 year, 3 year, if you follow this particular method, if you have a 3x winning trade and you are winning 50% of the time, you will be consistently profitable. Consistently profitable. I believe you can easily maintain a 50% win rate. It's not that easy, but if you have a consistent framework method to take your trades, you will be consistently profitable. Absolutely no doubt about it. This is the way you need to look at data. I hope this is adding some value to your way of looking at your trading. All right. And I'll also show you how you can track your data for free. Trade expectancy. When you combine your probability or win ratio with your profit or loss or profit factor, what you get is trade expectancy. So let's say you have a win ratio of 60%. You make an average 3,000 per trade when you win and lose average 1,000 per trade when the trade does not work out. How do you calculate expectation, which is a statistical term? You take the probability of wins, 60% multiplied by the profit. So 0.6 into 3,000. And you remove the losses from it. So 40% of the time you're losing 0.4 into 1,000. When you calculate this, you will get 1,400. 0.6 into 3,000 is 1,800. 0.4 into 1,000 is 400. Your expectation to make money on, say, 100 trades, considering your win ratio, considering your profit factor is 1,400. So if you take 100 trades, you will make 1,40,000. If you have these numbers. What if it is 50% win ratio and you only make 2,000 when you win and you lose 1,000? So what will happen? 50%. So 0.5 into 2,000. 50% win ratio is 1,000. 0.5 into 1,000, which is your loss, is 500. Your expectation is still 500 positive. So if you have a 50% win ratio, but you are making twice the amount you are risking in every trade, you will still have positive expectation. If you take 100 trades, you will make 50 with these numbers. What is my profit factor? 355. I took 15 trades. Let's say over the next 6 months, I take 100 trades. I will be making 35,500 rupees. Consider the fact that I am currently keeping 2 lakhs in my real demo account, so to speak. All right. So it's a specific account I have kept for just demonstrating my trading to all of you, all the members who join weekly mastermind. Over 2 lakhs in 6 months, if you are making 35,500, say, let's say you make 70K over 1 year, this is 35% return. 35% return is incredible. It is incredible. If you're not happy with 35% return on your capital, I don't know what you are looking for. This is beyond fantastic. Even if you consider, let's say, 6% of FD rates, it's 6 times that. Even if it is 8%, it is more than 4 times of risk-free rate of return. That is simply mind-blowing. If you can consistently make 35% on your capital, there are people who will put a gun to your head and make you trade their money. Makes sense? This is the reality of trading. I am not talking about fund trades. I'm not talking about multi-baggers. This is real trading. If you do this, it will be boring, but you will be incredibly rich in a very short period of time. Makes sense? Or no. So what have we learned so far? Oops. Is that we need to improve our profit factor, which is the quality of our trades. We need to also improve our win ratio, which is the efficiency of your trades, but it is not as important as improving profit factor. So you can work with 50%, 40% win ratio, but if your profit factor is good, you will be profitable over a long period of time with incredible consistency. So quality over efficiency is what you need to pick every time. What do we do for that? We use intraday trading guidelines, which will help you improve the quality of your trades, help you avoid bad trades, low probability trades, and that overall will result in consistent profitability. We need to maintain consistency. But in what? We need to be consistent in the number of trades per day. We need to have a rule that, okay, if I make a winning trade, I will stop. If I make 2 losing trades, I will stop and I will target, let's say 2x, 3x profit factor. All those things you need to be incredibly consistent with. All right. Win ratios. If you're all over the place, then it means that you're not using a consistent method. If you're not using a consistent method, how will you get consistent results? So if you want to achieve consistent results, you can do that by having a logical and consistent trading framework, which is what this complete trading framework is all about. It will give you consistent guidelines to follow when you're trying to trade in the markets. If you can do that, you will achieve consistent results over a period of time. And if you do it for 1 or 2 months, trust me, you're not going to go to any other method ever, because once you taste consistency, you will never let go of it. I am pretty sure in your life, there have been trading methods which gave you good profits, but then they lost everything for you. So you were not staying with that method because it was not consistent. It did give you big profits, but it also gave you big losses. What is the use? But even if you are making small consistent profits and that method works over a period of time and most of the market conditions, and you can deal with different market conditions, if you have a framework guiding you with that, I'm 100% confident that you're not going to let go of that ever in your life. Now, last point, very important point. Then I will go to Q&A, guys. Some people have asked questions. Don't feel that I'm ignoring you. It's not. I'm just going to deal with that after the presentation. I want to maintain my flow here. This is a very important chart. Now, you might be wondering where I'm getting my charts. I'm going to show you. Don't worry. This shows my trades. 0 in the center, 0%, 0 to 2% trades, 2 to 4% trades, 0 to 2% losses, 2 to 4% losses. Now, what do you see from this chart? One, I have been incredibly consistent in remaining within this boundary. I would really appreciate if I get more on the right side, but I don't want to go to the left where I'm losing big. This is a complete no. How do you lose big? 2 ways. One, you don't respect your risk management rules. What it includes? Amount you are going to lose on a trade, number of trades you are going to take. If I have fixed number of trades I'm going to take, I have strict rules, win, loss, whatever. If I'm going to risk a fixed percentage of my capital, and again, that is not just one way of doing things. It's a deep topic, guys. I have a whole intensive on this where I talked about it for 15-20 days. Again, part of CTF. Amount of money you're losing, number of trades you're taking. If you ignore this, then you are not going to be consistently profitable. If you put a stop loss, keep modifying it down, you will lose more money than you plan to lose. If you say, I'm going to stop after 2 losing trades, but you take 10 trades, out of that, 8 are losing, 2 are winning, overall the result is so bad. It is going to destroy and it will put you somewhere far to the left of this graph. Not good. Now, how can you have big winning trades? Let's say you're trading with 4 lots. You're targeting 2x. As soon as you reach 2x, you book 3 lots. You bring your stop loss to cost on the 1 lot that is remaining and you let it run. This is called as a runner. So sometimes you will make 2x, you might make 5x. A big day like election result day, you might make 5x in very short period of time. You don't want to make all 5x on 4 lots. That is being greedy. Take your 2x on your 3 lots and let your 1 lot run. That is going to change your life. That is going to change your life. And that will push you towards right, which is good. But how does it look? Okay, what exactly you want to do? When I say you should not focus too much on improving your efficiency, but focus on improving quality. And what if you improve efficiency? How does it look? And if you improve quality, how does it look? All right. So let us take a look at that. So I've made 3 graphs for you. This is usually normally how trading is going for people. They have a standard distribution to their trade, just as you looked at mine on the previous chart. They might have very high number of losing trades. And they may be losing big on those trades. And that will result in consistent losses. All right. Now, if you want to improve from this situation, right, you can do it in 2 ways. This is 1, this is 2. You can improve your efficiency. So number of trades, if you take more number of winning trades, your graph will be skewed to the right. But I showed you an example. Let's say you're making 3K when you win and you lose 1K when you hit a loss. And you have 2 trades that are profitable, 8 trades that are loss making. In a total of 10 trades, you make 6,000 profit, 8,000 loss. So you have small number of winning trades, but you are making 3x, you are losing 2,000. If you have a huge number of winning trades, so you, out of these 10 trades, all right, let us put different numbers on the chart. Out of these 10 trades, you win 9 trades, but instead of making 1,000, you are making just 500. This is your win. And when you lose big. So there was just 1 losing trade and you lost 5,000 on. Total profit 4,500, total loss 5,000. What is the net result? Minus 500. So you have a 90% hit ratio. But is it useful? No. If you're losing too much, it's not helpful. If you want to have higher probability of win, you need to have lower profit targets. And you need to keep your stop losses more to make sure you give your trades chance and time to be successful. This is wrong. This is turned on its head. So just because you have a very high number of profitable trades does not make you overall profitable trader. But if you have a consistent distribution to your trades, all right. So let us take, you win 50% of the time, you lose 50% of the time. When you win, you make 2,000. When you lose 1,000. 5 trades, you make 10,000 rupees. 5 trades, you lose 5,000 rupees. What is the net result? Makes sense? How do you improve the quality of your trade? Is by improving your profit factor. Now you have the same win ratio, 50% only. But you are making 3,000 when you win and losing 1,000 when you lose. Now, 5 trades out of 10 trades, 50%, you make 15,000. Now your overall profit is 10,000. Average profit is increasing. Makes sense. This is how you will improve the quality of your trading. Improving profit factor does not cause you stress. You need to find the correct framework. But if you have the framework to guide you, it does not cause you stress. Improving efficiency, number of winning trades is incredibly stressful. And I'll give you proof of that. Now you need to have some understanding of trading psychology to understand this correctly. Same logic, 10 trades, 50% trades, you win, 50% trades, you lose. What happens to your confidence? One trade, let's say winning trade gives you 1% confidence. Does not matter if you make 1,000 or 1 lakh, it is the same. 1% confidence. Always remember, our trading psychology is skewed in the favor of negative because our brain developed to keep us alive. Profitability, lifestyle, these are very recent stuff. I'm talking about the evolutionary perspective. Our brain is still like it was 50,000 years ago. 1% confidence increase when you win, but when you lose 3 to 5% of your confidence. These are actual numbers, studies conducted. What is happening? 5 trades, you improve your confidence by 5%. 5 losing trades, you lose somewhere from 15 to 25% of your confidence. This is digital, plus or minus. Minus 10 rupees, still confidence gone. Plus 10,000 rupees, still gain simply 1% confidence. What is happening here? If you focus on improving this, make it 90-10. You will gain 9% confidence and you will lose, in this case, 3 to 5% confidence. Your net confidence is somewhere from 6 to 4. This is not a good number because trying to improve your confidence by winning every time is incredibly stressful. You make very little progress. Very little progress. So what you need to do is to improve your framework so that how is your confidence going to improve over a period of time, right? So going to the same example, 51%, 3 to 5%. This is where you start. But now, if you are following this framework consistently, you are making your results consistently. You know there will be loss-making trades. You are quite sure of that. You know that even if I lose 2-3 trades in a row, I'm not going to lose because my framework is solid. What happens? Now, this number goes down, this number increases. Over a period of time, I'm not talking about 1 week, 2 weeks, or if you take my course, what will happen after 1 month? Please don't ask me that question. It does not improve in 1 month. Let's say you do it for 2 years. And you come to a stage where every time you win, your confidence increases by 5%. Every time you lose, it only reduces by 2%. What is happening now? 5 profitable trades, 25% increase in profit. 5 loss-making trades, 10% reduction in profit. Confidence, sorry. 15% net gain in confidence. Month over month, this will get accumulated. This 5 will become 6, 6 will become 7, this 2 will become 1.8, 1.5, never going to 0, but it will reduce, it will increase. This is also not going to go to 100%. There will be a cap. And that will give you your real confidence equation in your trading frame. If you do it, repeat it enough number of times, you will be so sure that you are going to make money that Nothing will affect you. Election results positive, no issues. Election result negative, no issues. You will focus on your framework. You will keep deploying your framework in the market. All you want is markets to open. That's it. Nothing else. Whatever the market does, your framework will guide you. And it is not a trade setup. So if you are excited about my framework, it's not a trade setup. It's not like you'll get 3 trade setups, you work all the time. No, you'll have to work hard, incredibly hard. I have 488 videos in total in my framework. I give you 1 year access, which renews at a small fee. X amount charge at the start, but not the same amount charge when you renew. Renewal is very small. What is happening here? You'll have to put time. Why I'm giving you 1 year? Why I'm not promising you results in 15 days? It's not possible. Work consistently on your craft of trading. Improve it consistently. Let your confidence improve. Things will change dramatically for you. That is what I want for you. That is what I'm aiming